Roblox is making billions in revenue, yet they're bleeding money faster than a bucket with holes in the bottom. Their Q1 2025 report showed $1.04 billion in revenue, up 29% year over year. But they're still reporting massive net losses between $977 million and $1.037 billion for 2025. Picture a massive cruise ship taking on water while the crew celebrates record passenger numbers. That's Roblox right now. With 97.8 million daily active users and creators earning a record $281.6 million in a single quarter, you'd expect financial stability. But the numbers tell a different story. Let's dive into the math that reveals why this digital empire could be facing a 2026 collapse, despite those surface-level growth metrics. The billion-dollar paradox. Think about Roblox for a second, a company raking in over $1 billion. You'd assume they're swimming in profits, right? Actually, they're losing money faster than they can count it. I know it sounds completely backwards, but the numbers don't lie. Let's look at what Roblox actually brought in. Their Q1 2025 revenue hit $1.04 billion. That's serious cash flowing into the company. They saw 29% growth compared to the same period last year. Most businesses would kill for that kind of growth rate. But here's where things get weird. Despite bringing in all this money, Roblox is projected to lose between $977 million and $1.037 billion in 2025. They're making billions but losing billions simultaneously. It's like earning a fortune only to be robbed by invisible thieves every month. The financial reality simply defies conventional business logic. This situation resembles a leaky bucket. Imagine Roblox pouring billions of dollars into the top. Their revenue from games, Robux purchases, and premium subscriptions. But instead of filling up, the bucket has massive holes where money pours out even faster than it comes in. No matter how much more they pour in, the bucket never fills because the holes keep getting bigger. When we break down the math, it becomes concerning. Roblox expects to bring in around $4.3 billion in revenue for 2025. With projected losses around $1 billion, roughly 23% of all money they make vanishes. It's equivalent to working 5 days a week, but giving away Monday entirely for free, every single week. This problem extends beyond Roblox. Uber grew tremendously, but lost over $16 billion between 2016 and 2020 while their revenue skyrocketed. Amazon spent years burning cash in their early days, losing money quarter after quarter. The difference? Amazon had a clear path to profitability. Their losses were strategic investments that eventually paid off. With Roblox, the roadmap to turn things around remains unclear. Snapchat reported similar issues. $1.7 billion in revenue, but $1 billion in losses in 2019. These companies bet on the grow now, profit later model with varying success rates. The stock market reflects this uncertainty. Roblox's stock chart resembles a roller coaster, swinging from highs near $47 to lows around $25 in the past year alone, almost 50% drops and jumps. These wild fluctuations indicate investors can't decide if Roblox represents the next big thing or a money pit. Are these normal growing pains? Maybe Roblox is investing in their future with temporary losses? Their executives suggest this narrative. However, examining the financial reports reveals something more concerning. These aren't one-time expenses. The losses are fundamentally embedded in their business model. Their operating expenses grow year after year. In Q3 2024, these expenses jumped 16% compared to the previous year, faster than some revenue growth areas. When costs outpace income, the trajectory becomes problematic. It's like getting a raise, but immediately increasing your spending by even more. Another red flag. Roblox has consistently lost money since going public in 2021. This isn't a temporary situation, it's a pattern. And these losses aren't shrinking. In some quarters, they're actually increasing. This persistent pattern suggests less investing for growth and more a fundamentally broken business model. In everyday terms, imagine running a lemonade stand where you spend $1.23 to make and sell $1 worth of lemonade. You could sell 1 million cups and still lose money on every single one. That's essentially Roblox's current situation. More sales translate to more losses. So is Roblox really losing money despite billions in revenue? Absolutely. The financial statements confirm it clearly. Evidence suggests these aren't temporary growing pains, but systematic operational issues. This matters significantly because Roblox isn't a small startup with years to burn cash. They're a major platform with millions of users and thousands of dependent developers. If Roblox can't plug their bucket holes, these stakeholders will eventually feel the impact. The biggest leak appears to be Roblox's massive creator economy. They've built an impressive platform where people create games that millions play. These creators earn serious money, turning Roblox development into full-time careers. Great for creators, but a significant financial drain for the company. When users spend on Roblox, a substantial portion flows directly to creators. As Roblox grows, these payments increase. Their success directly amplifies one of their biggest expenses. Unlike costs that become more efficient at scale, creator payments remain tied to revenue. They don't decrease as the company expands. They face a paradox. Growth is necessary to satisfy investors, but growth itself doesn't solve their underlying profit problem. It's a uniquely challenging position, even among tech companies struggling with profitability. The creator economy money drain. Let's talk about that first massive leak in Roblox's financial bucket, creator payouts. In Q1 2025 alone, Roblox paid out a record $281.6 million to developers. That's over $3 million every single day flowing out to creators. And this number keeps growing quarter after quarter. This represents a dramatic increase from just a few years ago, with current quarterly payouts now exceeding what developers earned in entire years previously. Behind these numbers are real success stories, like Alex, who started coding on Roblox at 16 and now employs a team of 12 people building experiences that millions play every month. Roblox built their entire business model around these creators. They don't make most of the games and experiences on their platform. Independent developers do. Roblox provides the tools, infrastructure, and audience, and creators build the content that keeps users coming back day after day. It's actually pretty genius when you think about it. Instead of paying thousands of employees to create content, they crowdsource it from a global community of developers. When this system works, it's a win-win. Creators get access to millions of potential players without needing to build their own marketing and distribution. Roblox gets tons of fresh content without having to create it themselves. Users get endless new experiences to enjoy. But there's a catch. Roblox has to pay these creators, and those payments are growing at an alarming rate. The growth curve of creator payouts is accelerating faster than Roblox's overall revenue. In Q1 2025, creator earnings made up approximately 27% of Roblox's total revenue. That means for every dollar Roblox brings in, 27 cents goes right back out the door to developers. This percentage has been steadily climbing from 24% in 2021. Each percentage point represents tens of millions of dollars bleeding from Roblox's bottom line. What's even more striking is the success of top creators on the platform. Over 100 Roblox developers earned more than $1 million in the past 12 months. The top games like Adopt Me, Brookhaven, and Royale High bring in tens of millions of dollars annually. The creators behind these games have built entire companies around their Roblox success, with teams of developers, artists, and marketers. This success story is amazing for those creators. They've built careers and businesses on Roblox. Some have even become millionaires before turning 21. But for Roblox's financial health, it creates a challenging dynamic. The more successful these creators become, the more money flows out of Roblox. Understanding how the money splits between Roblox and creators is important here. When users spend Robux in a game, creators typically receive between 50 to 70% of that revenue, depending on how it's priced. The exact percentage varies based on the type of purchase and other factors, but the key point is that Roblox keeps less than half in many cases. Compare this to other platforms. Apple's App Store takes a 30% cut of all transactions. Valve's Steam takes about 30% too. These platforms keep significantly more of each dollar spent than Roblox does. Roblox has painted themselves into a corner with their generous revenue share model. If they tried to increase their cut now, they'd face massive backlash from creators who have built their livelihoods around the current splits. The expectations around creator earnings keep rising too. As the platform matures, developers expect more stable and generous compensation. Many creators now rely on Roblox income to pay their bills, employees, and business expenses. They've made career decisions based on Roblox's payout structure. Any attempt to reduce these payments would likely cause an exodus of top talent from the platform. We've seen how creator backlash can damage platforms before. When YouTube changed their monetization policies, many creators publicly criticized the platform, and some even left. Twitch faced similar challenges when they adjusted their subscription revenue splits. Platforms depend on creator goodwill, and once that trust is broken, it's hard to rebuild. For Roblox, the math is becoming concerning. If creator payouts continue growing at their current rate, they'll exceed $1 billion annually by the end of 2025. That's $1 billion that Roblox brings in, but doesn't get to keep. And unlike most business expenses that can be trimmed during tough times, creator payments are directly tied to revenue. Roblox can't easily reduce these payments without undermining their entire platform. This creates a structural financial challenge. As Roblox grows, their creator payments grow proportionally or even faster. It's like having a pay raise that's immediately offset by higher taxes. You make more money, but don't necessarily keep more. The company has tried to manage this through different monetization strategies like premium payouts, new ad formats, and brand partnerships. But these initiatives haven't fundamentally changed the core financial relationship between Roblox and its creators. From a business perspective, Roblox has created an amazing distribution platform for indie game developers, but their generous revenue sharing means they're left with smaller margins than comparable tech platforms. The viral success of creating this developer ecosystem has come with a hefty price tag. And this is just the first major leak in Roblox's bucket. The second leak might be even more challenging to address: the enormous cost of maintaining a safe platform for millions of young users. When you have 60% of your users under the age of 16, safety isn't an option. It's an absolute necessity. And it comes with a price tag that grows with every new user who joins the platform. Safety and infrastructure, the hidden money pit. The second major leak in Roblox's financial bucket is actually hiding in plain sight. When most people think about tech companies, they imagine servers, software development, and maybe some marketing costs. But for Roblox, there's an enormous expense that doesn't show up in flashy marketing materials or investor presentations: safety infrastructure. Here's something crucial to understand about Roblox. 60% of their users are under 16 years old. This demographic reality creates a massive financial responsibility. When your platform is filled with kids, safety becomes an absolute necessity that costs a fortune to maintain. Roblox must invest in safety at levels most other platforms don't. They're essentially running a digital playground for children, which means they need the digital equivalent of playground monitors, safety inspectors, fencing, cameras, and emergency response teams. This translates to enormous spending on content moderation. Roblox employs thousands of people whose sole job is reviewing user-generated content. Because they're dealing with child safety, they need trained specialists who understand the unique risks children face online. Every game, virtual item, chat message, and user profile needs potential review. With millions of interactions happening every minute, this requires both human moderators and sophisticated AI systems. Consider what happened in 2018 when a child's avatar was virtually assaulted in a Roblox game. The incident made national headlines, terrified parents, and required immediate response from the company. They had to quickly identify the perpetrators, remove the offensive content, strengthen their filtering systems, and rebuild trust with millions of concerned parents. This single incident likely cost them millions in emergency response, system upgrades, and damage control. Without robust safety systems, such incidents could become commonplace. The AI systems themselves represent another major cost. Roblox has developed custom machine learning models to detect inappropriate content, potential grooming behavior, scams, and other risks. These systems require specialized engineers, massive computing resources, and constant updating to stay ahead of bad actors. The scale is staggering. Roblox processes over 4 billion chat messages daily. Their automated moderation systems scan every message in real time to catch anything inappropriate before a child sees it. Even with extremely high accuracy rates, millions of potential violations require human review monthly. Beyond content moderation, Roblox maintains extensive parental controls, age verification systems, reporting tools, and educational resources about online safety. Each system requires development teams, support staff, and ongoing maintenance, continuous investments that grow with the platform. The infrastructure costs extend beyond safety features. Roblox runs one of the most complex gaming backends globally, maintaining a platform where millions of unique user-created games run simultaneously. This requires sophisticated cloud infrastructure with exceptional reliability. Server costs alone are astronomical. With 97.8 million daily active users, many spending hours on the platform daily, the computing resources required are massive. Unlike companies that can reduce service during slow periods, Roblox needs high availability 24/7 for their young audience. The global nature creates additional complexity. Operating across hundreds of countries, each with different regulations around child safety, data privacy, and content standards means Roblox needs regionalized safety features, content moderation teams familiar with local contexts, and legal compliance staff for each major market. In Europe, GDPR imposes strict requirements for handling children's data. In China, content standards differ dramatically from those in the United States. Each region introduces new compliance costs that multiply with global expansion. These safety and infrastructure costs don't scale efficiently with revenue. If Roblox doubles their user base, they need to approximately double their safety infrastructure. There's no economy of scale that suddenly makes moderating content or maintaining servers cheaper at size. The complexity increases with scale. What makes these costs particularly difficult to address is that Roblox can't reduce them without compromising user safety. Cutting back on content moderation could lead to harmful content reaching children. Reducing server capacity would create laggy gameplay experiences. Limiting safety features could trigger regulatory actions or parent backlash. These costs represent the minimum viable investment needed to operate a platform for children at Roblox's scale. Unlike discretionary spending that can be adjusted during financial challenges, safety infrastructure is mission critical. Any major incident involving child safety could devastate Roblox's brand and user trust. While Roblox doesn't break out their safety and infrastructure costs specifically in financial reports, industry analysts estimate they spend hundreds of millions annually on these systems. As their user base grows, these costs grow in parallel, creating a permanent drag on profitability. This safety infrastructure represents the second major leak in Roblox's financial bucket. But there's a third leak that's potentially even more concerning: Roblox's massive, ongoing bet on the metaverse. While other tech companies scaled back their metaverse investments when economic conditions got tough, Roblox doubled down, pouring billions into a virtual future that might never pay off. Betting the farm on the metaverse. The third hole in Roblox's bucket might be the biggest one. They're all in bet on the metaverse. While companies like Meta scaled back their metaverse spending when economic realities hit, Roblox has done the opposite. They've doubled down, continuing to pour billions into building their vision of the virtual future. Roblox makes their metaverse ambitions clear. CEO David Baszucki regularly talks about their mission to reimagine the way people come together. This represents their entire long-term strategy. They see themselves as building the foundation for how humans will interact online in the future. That's an exciting vision, but it's also incredibly expensive. Roblox's financial statements reveal massive spending on research and development. In 2024, they spent over $900 million on R&D alone. That's unusual for a gaming company of their size. They're spending like a major tech giant, but without the diverse revenue streams to support such investment. A substantial portion funds metaverse technologies that might not generate revenue for years, if ever. This metaverse spending drains resources like a luxury spaceship being built without securing fuel supplies first. They're constructing an elaborate vessel that may never leave the launch pad if financial gravity pulls them down before completion. What exactly is Roblox building? Their investments span multiple areas. One major focus is advanced avatar systems. Roblox has invested heavily in creating more realistic and expressive digital avatars. They want users to feel truly present in virtual spaces, which means developing technology for facial expressions, body movements, and extensive customization options. They've also developed sophisticated spatial voice chat technology. These audio systems make conversations sound natural in virtual spaces, with voices coming from the right direction and distance, matching the acoustic properties of virtual environments. This technology requires specialized audio engineers and significant computing resources. Virtual economy tools represent another major investment area. Roblox is building systems for digital ownership, trading, and commerce. They're creating infrastructure for creators to sell virtual items, experiences, and services beyond simple in-game purchases, including blockchain-like verification systems and economic tools. Cross-platform technology adds to their spending. Roblox wants users to access their platform seamlessly across phones, computers, VR headsets, and future devices. Building experiences that work across different hardware types requires extensive engineering resources, unlike most game companies that focus on just one or two platforms. These investments share a common problem. They drain resources today while promising only potential future returns. This speculative spending assumes a future where the metaverse becomes as common as social media. That future might arrive, but when? Meanwhile, Roblox continues spending on this uncertain vision. Meta provides an instructive contrast. After losing over $13.7 billion on Reality Labs in 2022 alone, they've scaled back metaverse spending, focusing more on immediate revenue opportunities like AI. Meanwhile, Roblox increases metaverse investments despite their already precarious finances, widening the gap between current spending and revenue generation. Financial analysts have grown skeptical about this approach. In earnings calls, they've pressed Roblox executives about the timeline for returns on these investments. The responses have emphasized long-term potential rather than specific revenue projections, creating investor uncertainty, especially considering ongoing losses. Some in the investment community describe Roblox's metaverse spending as a potential black hole, consuming massive resources without proportional returns. This concern appears in analyst reports questioning whether Roblox can sustain this level of speculative spending. The numbers paint a stark picture. Roughly half of Roblox's R&D budget likely goes toward metaverse technologies, around $450 million annually, ad-related infrastructure and personnel costs, and the total approaches $600 million yearly on technologies, generating minimal direct revenue. For a company already losing money, this creates tremendous financial pressure. It's like renovating your house for a speculative home business while already spending more than you earn each month. Executives defend this strategy by highlighting Roblox's unique position to build the metaverse. They have millions of users already engaged in virtual worlds, experience managing virtual economies, and an existing platform to build upon. These points are valid, but don't address the core question. Can Roblox afford this spending while still losing money? This metaverse bet creates the third major leak in Roblox's financial bucket. Combined with creator payouts and safety infrastructure costs, it forms a trio of financial pressures draining resources faster than revenue comes in. Together, they create a potentially unsustainable financial situation. With these three major leaks identified, creator payouts, safety infrastructure, and metaverse investments, we need to examine how they combine to create dangerous financial pressure on Roblox. The numbers don't add up. Let's do some financial detective work and see if the numbers behind Roblox actually make sense. You've heard all about their revenue growth and user numbers, but those flashy headlines don't tell the full story. I want to dig into the financial statements and show you what's really happening behind those impressive-sounding growth metrics. When Roblox announces their quarterly results, they highlight two main numbers: bookings growth and user growth. These numbers look impressive on the surface. Their bookings grew 31% year over year, meaning people are spending significantly more money on the platform. Their daily active users increased by 26%, reaching 97.8 million. Most companies would celebrate growth figures like these. But let's pull back the curtain on what these metrics actually reveal. Growth numbers can mask deeper financial problems if they don't translate to sustainable profit. Gaining millions of users only benefits a company when those users generate more money than they cost to acquire and support. It resembles a restaurant that serves increasingly more customers while losing money on every meal. More volume simply amplifies the fundamental problem. A more revealing metric is cash flow from operations, showing how much cash Roblox generates from day-to-day business. In Q3, Roblox reported $112.7 million in operating cash flow, up 68% from the previous year. While this represents improvement, it falls dramatically short when compared to their projected annual loss of around $1 billion. Even if they maintain this performance across 4 quarters, they'd generate approximately $450 million in operating cash, less than half their projected losses. To grasp the severity of this situation, we need to calculate their burn rate, how quickly they're depleting cash reserves. With roughly $2.1 billion in cash and short-term investments at the end of Q3, and effectively burning through approximately $550 million annually, their $1 billion loss minus $450 million cash flow. Their reserves would last less than 4 years under ideal conditions with no unexpected costs or growth slowdowns. This creates a financial countdown. Roblox must dramatically improve performance before cash runs out or secure additional funding. Raising money becomes increasingly difficult after years of consistent unprofitability. Despite these challenges, Roblox maintains a market capitalization of around $22.87 billion, valuing the company at approximately 9.6 times their trailing 12-month revenue. For context, mature technology companies typically trade at 3 to 5 times revenue. Companies command higher multiples when investors anticipate exceptional sustained growth. Roblox's valuation essentially assumes they'll continue rapid growth while eventually becoming profitable, a major assumption given their financial history. This high valuation creates vulnerability. Any growth deceleration could rapidly shift investor sentiment, potentially triggering significant stock price declines as we've witnessed with other high-growth tech companies. Roblox's own financial projections depend on 2 critical assumptions: continued user growth and increased monetization per user. Both face substantial hurdles. They've already captured about 59% of U.S. children under 16, leaving limited room for core demographic growth. They must either attract older users with different gaming preferences or expand internationally with typically lower monetization rates. Increasing per user spending presents equal challenges. Roblox already extracts significant revenue from users. $11.73 average bookings per daily active user in Q3, despite most being children with limited financial resources, pushing this higher risks parent backlash or hitting natural spending limits. The path to profitability remains murky. Recent quarters show inconsistent patterns in losses as a percentage of revenue, suggesting Roblox hasn't found a reliable formula for converting growth into profit. Their infrastructure costs grow with users, creator payouts increase with revenue, and R&D investments continue rising. Without fundamental changes to this cost structure, expansion might simply generate larger losses. Executives discuss eventual leverage in their business model, growing revenue faster than costs, but financial statements haven't demonstrated this convincingly. This creates a limited window for Roblox to resolve fundamental business model challenges before facing serious financial pressure. After years of operation and billions in revenue, Roblox still hasn't clearly demonstrated how or when they'll become profitable. The financial leaks aren't diminishing. Some may be widening over time. This reality might explain recent changes in company behavior. With concerning signs, they might be getting nervous about their financial future and reducing critical investments. Let's examine these warning signals and what they might mean for Roblox's long-term prospects. Signs of financial desperation. If you pay attention to what Roblox has been saying in recent investor calls, you'll start to notice some subtle but concerning shifts in their language. Last year, they talked constantly about growth, expansion, and big investments in the future. Now there's a new buzzword showing up more and more: operating efficiencies. That's corporate speak for we need to cut costs. This change in tone coincides with Roblox's slowing growth metrics. Bookings growth dropped from 22% in Q2 to 20% in Q3, while user growth decelerated from 25% to 20%. For a company valued primarily on growth expectations, these slowdowns can trigger internal panic. Tech companies under financial pressure typically implement changes gradually rather than announcing major cutbacks immediately. Roblox appears to be following this pattern with several telling indicators. Hiring has significantly slowed. Job postings decreased from over 300 open roles in early 2024 to fewer than 200 currently. While they've avoided layoffs so far, the reduced talent acquisition impacts innovation potential. A feature launches face consistent delays. Advanced avatar features with detailed facial expressions promised for mid-2024 remain in limited testing. Multiple creator tools showcased at last year's developer conference haven't fully launched. Infrastructure expansion has quietly stalled. Previous plans for server capacity in Southeast Asia and the Middle East have disappeared from earnings calls. When directly questioned about international infrastructure, their CFO pivoted to discussing optimizing existing resources. A developer support has been reduced. Creator community sources report longer support response times and canceled community events. As one frustrated developer told me, it feels like they've stopped investing in the people who actually build their platform. My support tickets take twice as long to get addressed now. These individual changes create a recognizable pattern of a company attempting to preserve cash. In their most recent earnings call, CFO Michael Guthrie stated, "We're focused on finding operating efficiencies across the business while maintaining our growth trajectory." Such statements typically signal ongoing or imminent cost-cutting measures. The concerning aspect is that these efficiencies target investments crucial for future growth. The developer relations team reductions save money today, but risk alienating creators who generate platform content. Similarly, decreased marketing presence at gaming conventions and scaled-back user acquisition campaigns improve immediate financial metrics while potentially stunting long-term growth. These cost-cutting measures can trigger a dangerous downward spiral. When a growth company reduces investment, growth typically slows further, creating additional financial pressure and prompting more cuts. A former Roblox employee recently confided, "There's growing anxiety internally that we're sacrificing what makes us special to hit quarterly targets. People who joined to build the future of gaming now feel like they're just maintaining what exists." We've seen this pattern with other platforms. When Snapchat cut creator initiatives and feature development in 2018 to improve finances, TikTok captured much of their audience. Twitter, now X, followed a similar trajectory after acquisition. Aggressive cost-cutting improved short-term finances, but led to reliability issues and user migration to alternatives like Threads. For Roblox, these efficiency measures carry particular risk because their business model depends on continuous innovation and creator support. If developers perceive platform stagnation or inadequate support, they might redirect their talents elsewhere, directly impacting user engagement. The situation becomes more complex given Roblox's demographic challenge. With 60% of users under 16, they face fundamental limitations on revenue per user. These younger users have less spending power and more parental restrictions on purchasing. This creates a difficult position. Roblox needs to either monetize young users more effectively, which has ethical limitations, or attract older users who typically spend more. Attracting older users requires different content and features, exactly the kinds of investments they appear to be reducing. The combination of demographic challenges and investment reduction creates a concerning outlook. Roblox needs to simultaneously improve finances while investing heavily to evolve their platform. Current evidence suggests they're prioritizing immediate financial results over long-term development, potentially creating serious consequences for their future growth and sustainability. As analysts watching these small signals compound over time, we can see how these seemingly minor adjustments today could substantially impact Roblox's competitive position tomorrow. The question becomes whether they can find a balance between financial discipline and necessary investment before the effects become irreversible. The demographic time bomb. Let's talk about something that keeps Roblox executives up at night, their user demographics. Here's a startling fact. 60% of all Roblox users are under 16 years old. That's not just a random statistic. It's a fundamental business challenge that creates serious limitations on how much money Roblox can make. Think about it for a second. Kids under 16 don't have their own credit cards. They don't have jobs. They rely on allowances or convincing their parents to make purchases for them. This creates an immediate ceiling on how much revenue each young user can generate, regardless of how engaged they are with the platform. Consider 10-year-old Alex, who begs his parents for Robux after seeing a limited edition avatar item. Even if he plays for hours daily, his spending is capped at what his parents allow. typically a modest monthly allowance that pales compared to an adult gamer's budget. When we look at Roblox's average bookings per daily active user, what they call ABPDAU, we see this limitation in action. Across their entire platform, Roblox generates about $11.73 per user per quarter. This figure falls substantially below what many gaming platforms with adult audiences achieve. For comparison, Unity reports average revenue per user of around $20 quarterly, primarily serving adult gamers and developers. The revenue difference becomes clearer when broken down by age groups. Industry analysts estimate that adult users on Roblox spend 3 to 4 times more than users under 13. A teenage user might spend $5 to $10 quarterly, while an adult user could spend $20 to $40 in the same period. This creates an obvious financial incentive for Roblox to attract older users, but their brand and content remain strongly associated with younger players. Geography compounds this challenge. Roblox users in the US and Canada generate significantly more revenue than users elsewhere. A North American user might generate $15 to $20 quarterly, while users in developing markets might generate just $2 to $5. As Roblox expands globally, they're adding millions of users who generate less revenue per person than their core North American audience. This demographic reality puts Roblox in a difficult position with 2 basic options. Option 1. Try to extract more money from their youthful user base. Option 2. Try to attract more older users who naturally spend more. Both approaches pose serious challenges. Pushing harder to monetize children immediately triggers ethical concerns and potential regulatory issues. Parents already worry about kids spending too much on digital goods. Schools have banned Roblox partly because of concerns about in-app purchases. Any aggressive push would likely trigger backlash from parents, educators, and regulators who scrutinize how digital platforms monetize children. Strict laws like the Children's Online Privacy Protection Act, COPPA, place significant restrictions on data collection and targeted advertising for users under 13. Similar regulations exist globally. These frameworks limit the monetization strategies Roblox can employ with their youngest users. Beyond these constraints, there's a practical limitation. Children have limited financial resources. You can't extract $50 monthly from a user whose total monthly allowance might be $20. Unlike adult audiences with credit cards and disposable income, children's spending is naturally capped. Roblox's second option, attracting older users, faces its own challenges. The platform has a strong brand association with children. Many teenagers and adults view Roblox as a kid's game. Changing this perception requires creating content for older audiences without alienating their core young users. Despite efforts to expand their demographic reach through partnerships with brands like Nike and Gucci and virtual concerts with artists like 21 Pilots, the demographic needle hasn't moved dramatically. The percentage of users over 16 has grown slightly, but Roblox remains primarily a platform for children and young teenagers. This creates a stark contrast with competitors serving adult audiences. A platform like Discord can implement premium subscriptions at $10 monthly without much pushback. Platforms like Twitch can integrate sophisticated advertising models because they face fewer child privacy regulations. Adult gaming platforms can sell cosmetic items at $15 to $20 each rather than the $1 to $5 price points common on Roblox. The financial impact is substantial. Roblox must acquire more users to generate the same revenue as platforms with adult audiences. They must build extensive safety systems that adult-focused competitors don't need. They face stricter limits on monetization strategies. These factors create structural challenges to profitability. If Roblox's financial situation continues deteriorating, these demographic limitations will make recovery more difficult. They can't simply raise prices or push more aggressive monetization without risking their core audience. They can't quickly shift to an older demographic after years of being known as a platform for kids. They're somewhat trapped by the very user base that made them successful. This brings us to a critical question. If these financial leaks continue, when might Roblox actually hit a breaking point? To answer that, we need to calculate their financial runway and determine when the bucket might actually run dry. The breaking point. When does the bucket run dry? Now let's get to the question everyone's wondering. When exactly does Roblox run out of money? I've been hinting at a potential collapse. But let's actually calculate when Roblox might hit a financial wall if things don't change. First, we need to look at their cash reserves. At the end of Q3 2024, Roblox reported having approximately $2.1 billion in cash and short-term investments. That's their financial safety net, the money they can use to cover losses while they try to fix their business model. Looking at their burn rate, Roblox is currently losing around $550 million annually when combining operational losses and cash flow. With $2.1 billion in reserves divided by this annual burn, they have approximately 3.8 years of runway, putting their breaking point around mid-2028 if conditions remain static. However, business conditions rarely stay unchanged, especially for growing companies like Roblox. Let's examine 3 potential futures for Roblox. The optimistic scenario. Roblox successfully increases monetization while controlling costs. They attract older users with higher spending power and develop efficient revenue streams like advertising. Their losses begin shrinking in 2025, reaching break-even by 2027. Their current cash reserves would comfortably carry them to profitability. The realistic scenario. Roblox continues growing revenue but struggles with cost control. Creator payouts rise proportionally with revenue, infrastructure costs increase with user growth, and Metaverse investments continue consuming resources. They slightly reduce annual losses, but face a potential cash crunch by early 2026. The pessimistic scenario. Conditions worsen as user growth slows due to increased competition. Creators demand better compensation, driving up payout rates. Infrastructure costs rise due to safety requirements and technical challenges. Their burn rate actually increases, potentially depleting cash reserves by late 2025. Several external factors could shift this timeline. High interest rates make raising additional capital more expensive for unprofitable companies. Negative investor sentiment toward cash-burning tech companies could restrict funding options. Competition could draw creators away, forcing Roblox to increase payouts to retain talent while simultaneously facing revenue decline. A critical indicator to watch is when creator payouts reach an unsustainable percentage of revenue. Currently at 27%, if this figure approaches 35 to 40% while other costs remain similar, Roblox would mathematically be unable to achieve profitability regardless of growth. If Roblox begins running low on funds, they have several options, each with significant drawbacks. They could reduce creator payouts, immediately improving finances, but triggering backlash from developers who've built businesses around current rates. Top creators might abandon the platform, taking their audiences along. Cutting features and services would save money short-term, but potentially harm user experience and platform growth, creating a downward spiral. Raising prices for Robux or taking larger transaction cuts would generate more revenue per transaction, but might reduce overall spending, particularly given their young user base with limited financial resources. Finally, they could seek additional funding through stock offerings or debt. However, raising capital while still unprofitable would likely come with unfavorable terms. Investors might demand significant control or restructuring, substantially diluting existing shareholders. The 2026 timeline isn't arbitrary. It's based on financial modeling accounting for Roblox's cash position, burn rate, projected growth, and market conditions. Their current trajectory points to serious financial pressure by 2026 that will force major business model changes. The greatest risk for Roblox isn't complete shutdown. That's unlikely given their size and importance. The real danger is being forced into drastic measures that fundamentally alter the platform. Imagine Roblox having creator payments, eliminating free play options, or flooding the platform with advertisements. The platform might technically survive, but would become unrecognizable to current users. Could Roblox actually collapse by 2026? The financial math indicates serious risk if they can't address their fundamental economic challenges. They need to dramatically improve financial performance in the next 18 months or prepare for painful changes to their platform and ecosystem. This timeline carries serious implications not just for Roblox as a company, but for thousands of creators depending on the platform for income. What happens to all those developers who've built careers around Roblox if What happens to creators if Roblox sinks? Let's talk about the human impact of Roblox's financial problems. Over 100 developers earned more than $1 million last year on this platform. Hundreds more earned six figures. Thousands of creators make enough to pay their bills, support their families, or fund their education. These are real people who have built careers and businesses around Roblox. A 19-year-old developer I interviewed last month shared how his life transformed through the platform. After seeing his games gain traction, he made the difficult decision to drop out of college to pursue development full-time. "I'm making more money than my parents now," he told me, his voice reflecting both pride and lingering disbelief. They were skeptical at first, but now they're supportive. Today, he employs 2 people and covers his living expenses entirely through Roblox income. His story represents thousands of others whose livelihoods depend on this platform's continued success. The dependency these creators have on Roblox has grown dramatically in recent years. Back in 2020, Roblox paid out around $250 million to developers for the entire year. In 2024, that figure has more than quadrupled. As these payments have grown, so has the number of people who rely on them. Development studios with 20-plus employees work exclusively on Roblox games. Animators, modelers, programmers, and game designers derive their entire income from the Roblox ecosystem. This dependency creates significant risk because creators have limited options to diversify. The skills they've developed are often platform-specific. Roblox uses its own programming language called Lua, which isn't widely used elsewhere. The game engines, tools, and even art styles that succeed on Roblox don't necessarily translate to other platforms. A Roblox financial crisis would ripple through this creator ecosystem with devastating effects. The most immediate impact would likely be reduced creator payouts. If Roblox needs to improve their finances quickly, they could decrease the percentage of revenue that goes to developers. Currently, creators receive about 70% of the revenue their games generate through the premium payouts program. Roblox could change this to 50% or even 30% overnight. For creators, such a change would be catastrophic. Losing 30 to 50% of your income without warning could transform a sustainable business into an immediate crisis. Developers would struggle to make ends meet. Studios would face layoffs. Projects in development would be abandoned as their financial viability evaporated. We've seen this pattern before with other platforms. During YouTube's Adpocalypse, in 2017, thousands of creators saw their income drop by 50 to 80% overnight when the platform changed monetization rules. Many had to close their studios, lay off staff, or find other jobs. Vine's shutdown in 2016 left creators who had built careers there scrambling, with many unable to replicate their success elsewhere. Could Roblox creators successfully migrate to other platforms? The transition would be difficult. There's no other platform with Roblox's specific combination of game creation tools, massive built-in audience, and monetization systems. Some might move to Unity or Unreal Engine, but they'd need to learn new skills, build new audiences, and develop different monetization strategies. The most successful developers might have an easier time transitioning with their resources and brand recognition. For mid-tier and smaller creators, the outlook would be much bleaker. Many lack the financial cushion to survive a prolonged transition period with little income. The psychological impact would be profound. In one studio I visited, a team of 6 developers had recently started keeping a contingency folder, documents outlining what they would do if Roblox revenue suddenly dropped. "We don't want to think about it," their lead developer confessed, "but we need to be prepared." Many creators, especially younger ones, have built their identities around being Roblox developers. They've gained recognition, community, and purpose through the platform. Losing that suddenly would create significant emotional distress beyond just the financial impact. Some creators are already taking protective measures. Several development studios have started creating content for other platforms while maintaining their Roblox presence. "It's like having insurance," one developer told me. Others are diversifying by selling assets to other developers, offering consulting services, or building educational content about Roblox development. The Roblox Creator Fund might provide some short-term relief in a crisis, but it isn't large enough to support everyone through a major disruption. This reflects a fundamental tension between platform economics and creator sustainability. The relationship between platforms and creators is inherently unbalanced. Platforms control the rules, algorithms, payment terms, and audience access. Creators build their livelihoods on these shifting sands, always vulnerable to changes beyond their control. The bigger picture: platform economics in crisis. Roblox's financial challenges aren't happening in isolation. They're part of a larger pattern affecting digital platforms across the internet. That leaky bucket metaphor I've been using? It turns out a lot of major platforms are dealing with similar holes, and some might be closer to running dry than you'd think. Take YouTube, for instance. Google's video giant generated an estimated $31.5 billion in revenue in 2023, with roughly 55% of ad revenue flowing to creators. After covering massive infrastructure costs for storing and streaming videos, content moderation teams, and investments in new features, YouTube only became consistently profitable after years of losses, and that profitability remains precarious. Twitch faces even tougher economics with its complex live streaming infrastructure that costs significantly more than YouTube's video storage. Despite Amazon's ownership since 2014, Twitch still struggles with profitability, repeatedly adjusting creator payment splits and increasing ad frequency to improve their finances. TikTok appears successful with explosive growth and reported profitability, but the same structural challenges are emerging. Their expanding creator payment programs and substantial infrastructure costs for recommendation algorithms and video delivery mirror the pattern. Discord shows similar pressure points. Despite raising over $1 billion in funding, they've struggled to convert their massive user base into sustainable revenue. These platforms all share the same fundamental tension in their economic models. Each faces a trilateral dilemma, simultaneously satisfying users, creators, and investors, three groups with conflicting demands. Users demand maximum value with minimal costs. Continuous feature improvements, responsive support, content diversity, and low or no prices. Any increase in monetization risks user backlash or exodus. Creators seek fair compensation, large audiences, and platform stability. As platforms mature, creator expectations evolve from gratitude for any payment to professional content businesses demanding sustainable economics. Investors require both growth and profitability, often an impossible combination. Early investors fund growth at all costs before eventually demanding profitable returns, creating a shift from growth-focused to profit-focused strategies, frequently at creators' expense. This creates the persistent leaky bucket problem. Platforms must invest heavily to build user bases and attract creators. They need ongoing investment to maintain quality and competitiveness. Yet they must also generate investor profit without alienating users or creators, an extraordinarily difficult balancing act. The attention economy intensifies this challenge by creating winner-take-all dynamics. Users gravitate toward dominant platforms where others already gather. This drives companies to prioritize growth over profitability to secure market position. The strategy is straightforward: grow now, figure out profit later, but later often never materializes without painful adjustments. Roblox clearly illustrates these tensions. Their young users have limited spending power. Their creator ecosystem requires increasing payouts. Their infrastructure costs scale with user growth. Their investors expect continued expansion and eventual profitability. Something must give. We're entering a new phase in platform economics where easy growth has ended. The early internet allowed companies to expand with minimal regulation and monetization pressure. Users were simply excited to access new services. Creators welcomed any audience or payment. Investors patiently watched as platforms built massive user bases. That era is over. Today's users have high expectations and numerous alternatives. Creators have professionalized and expect sustainable income. Regulators impose growing compliance costs. Investors, facing higher interest rates and economic uncertainty, demand shorter paths to profitability. The most troubling aspect is who typically bears the cost when platforms face financial pressure: creators and users. YouTube changes algorithms to favor ad-friendly content. Twitch reduces creator payment rates. Facebook increases ad loads and reduces organic reach. Platforms control the rules and change them to protect themselves first when financial pressure hits. Many digital platforms face similar structural challenges threatening long-term sustainability. While specific details vary, the fundamental tensions between user experience, creator compensation, and investor returns create precarious economics throughout the digital landscape. Not every platform will collapse. Many will find sustainable models through difficult adjustments. Some will be acquired by larger companies that can absorb losses. Others will focus on profitable niches rather than global dominance. But the era of endless growth with continuing losses is likely ending. Roblox's situation is particularly acute due to their specific challenges. Young users with limited spending, massive creator payouts, extensive safety requirements, and enormous metaverse investments. Their attempt to solve this economic puzzle could provide a roadmap for other platforms facing similar pressures. If they succeed, they'll demonstrate a viable path forward in the platform economy. If they fail, their struggles will serve as a warning about the fundamentally unsustainable economics driving many digital platforms. The question becomes, what would actually make Roblox profitable? Is there a viable path balancing these competing pressures? Let's explore what it would take for Roblox to plug the holes in their leaky bucket once and for all. Can Roblox be saved? After spending all this time pointing out problems, the big question remains. Can Roblox actually fix their financial situation? Is there a realistic path to profitability? Or are they stuck in a business model that simply doesn't work? Let's get real about what would need to happen for Roblox to turn things around. They have 4 main options. Make more money per user. Roblox currently earns $11.73 per user quarterly. Increasing this to $15 to $16 would generate hundreds of millions in additional revenue without adding new users. The challenge? Most users are kids with limited spending power. Raising Robux prices risks reducing overall spending, while adding premium features might create a pay-to-win perception. Advertising shows promise. Generating even $1 monthly per user would add $350 million annually, though marketing to children brings regulatory hurdles. Pay creators less. Reducing creator payouts from 70% to 50% would immediately retain hundreds of millions yearly. The downside? Creator revolt. Top developers might abandon the platform, content quality would suffer, and user engagement would likely plummet. Remember YouTube's creator backlash after monetization changes? Roblox depends even more heavily on its developers. Cut infrastructure costs. Roblox spends massively on servers, safety systems, and development. Optimizing infrastructure could save money, but at what cost? Less reliable performance, fewer new features, and potential safety incidents. For a platform used primarily by children, compromising safety could trigger both parental exodus and regulatory crackdowns. Attract older users. Adults might spend 3 to 4 times more than children with fewer monetization restrictions. Picture a Roblox where half the users are teens and adults rather than children. Their financial picture transforms dramatically. The difficulty? Overcoming a strong brand association with children without alienating their core audience. For Roblox to become profitable, they'll need some combination of all 4 approaches. In 2024, they're projected to lose around $1 billion on $4.3 billion revenue. Breaking even requires either increasing revenue by 23% without adding costs, cutting costs by 23% without losing revenue, or finding middle ground. Is 23% improvement feasible? It's challenging but possible. Imagine if they increased monetization per user by 10% through better conversion and light advertising, reduced creator payments modestly to 65%, optimized infrastructure by 5%, and increased their percentage of users over 16 from 40% to 45%. This balanced approach could substantially narrow their profitability gap. Such changes would take time, likely 2 to 3 years to implement without major disruption. This means Roblox needs investor patience during transition. Other companies have successfully navigated similar paths. Amazon lost money for years before becoming enormously profitable, gradually increasing retail margins while building high-margin services like AWS. Spotify struggled with profitability for over a decade, but recently achieved consistent positive earnings by improving their revenue mix and cost structure. Both made continuous incremental improvements rather than radical changes. For Roblox, a balanced approach seems most promising. Rather than drastic cuts, they should focus on steady improvements. 1. Gradually increase monetization through careful advertising and premium features. 2. Moderately adjust creator economics to improve margins. 3. Optimize infrastructure through technical improvements. 4. Expand demographic reach through diverse content types. 5. Consider strategic partnerships for additional revenue. Roblox has unique advantages. Incredible user engagement, 2.5 billion platform hours monthly, a self-sustaining creator ecosystem, sophisticated technology, and $2.1 billion in cash reserves, giving them runway to implement changes methodically. What would it take for Roblox to become profitable? A combination of increased monetization, moderate cost control, and investor patience. They need to improve financial metrics by about 23% to break even, challenging but achievable through sustained efforts. The transition won't be quick. Roblox likely won't achieve consistent profitability until 2026 to 2027, even with strong execution. But with methodical improvements that preserve their ecosystem, they have a viable path forward. The question remains, will investors provide time for gradual transition? If market pressures force aggressive cuts or monetization, Roblox risks damaging long-term value for short-term gains. Roblox's story transcends one company's finances. It's a test case for whether digital platforms can transition from growth-focused to profit-focused without destroying their ecosystems. Their outcome will offer valuable lessons about the sustainability of digital platforms millions rely on daily. Roblox's financial problems are a warning sign for all digital platforms pursuing growth without solid monetization plans. That leaky bucket could eventually run dry. When evaluating platforms, look beyond flashy user statistics. Consider their actual profitability instead of cash burn rates. Whether Roblox patches their leaks or eventually sinks will reveal crucial lessons about digital economics. Their story demonstrates that growth without profitability creates an unsustainable ecosystem for everyone involved. As digital platforms continue evolving, remember, even the biggest buckets eventually empty when more water flows out than in.